What's up, my fellow traders? Hope you all having an awesome weekend, and I hope you're all enjoying your weekend. I'm enjoying my weekend as well. But this weekend's video is going to be, as usual, the one you get on Sundays. But before that, it is a long awaited topic I wanted to upload here on my YouTube channel. Now, I know this is not going to be really interested topic for most of the traders out there. Trading psychology, risk management is something that most traders ignore, and that is why we have only few percent of traders who are actually making money in the market. And I know not many people is going to watch this full video just because it might be boring for you, or just because you just want to thrill or just want to follow someone sending buy or sell signal, but not realizing that's not going to work for long term. It is something I'm going to give you, a method I'm going to give you that I have been using from last so many years, and with that method, since the day I started following that method, since that day I start to make money. Before that, I was a break-even trader. I was not making money because I was not sure what risk shall I take for my next trade. I used to have winning trades, and then a couple of few trades after, I start losing money. Like sometime I get break even. That is the first stage of becoming a profitable trader before you are a break even trader. But how you become profitable? Number one, you follow the right risk management. That is what you're going to learn in this video. Number two, follow and stick with a strategy that you follow. Never change your strategies. If you follow me, stick with that. Trust me, in the long run, you're going to make money, because if your strategy is performing well and if you have a losing streak, do not change that ever. So in this video, we're going to look at some live trades we took from last couple of months and how I managed to stay consistently profitable using a simple method, simple risk management method, even though we had losing streak as well. And with this video, in the second half, I'm going to give you a strategy that is also a long awaited strategy, which is how you can trade in a trending market, in a trend continuation zones, and how you can take your trades from the counter trading zones. I'm going to show you how you can draw those zones as accurate as possible, and I'm going to show you how you can take your trades when the market is trending, and from the trend continuation zones, the recent zone that breaks, that turns into trend continuation zone. So after all this, I'm going to give you a challenge for next 60 days. If you follow that challenge, if you consistently do that, then I promise you, you are not going to blow up your account. Now, I also want to mention one thing. Take this challenge on your demo account. Do not do it on a live account. The reason I'm saying that, do it on your demo account, because you might be trading with your live money. If you want to do that, that's fine, do that. If you want to gamble, do that on your live account. But for the sake of this video, for the sake of your challenge, have a separate account, open a demo account, and use the exact rules, the one I'm going to teach you. Use the exact strategy, and 2 months later, you will get amazed to see those results. Because I'm following that, I'm profitable. Why can't you become profitable? The only hurdle is your trading psychology, your risk management. But after this video, I'm sure, and after taking this challenge 2 months, when you come back to this video, leave a comment down there that you follow this challenge and what are your results. So let's go on the screens and let me show you how we can take the trades, how you can take your risk, how you can reduce your risk, how you can take your trades if you have a losing streak, how you can tweak with the risk inside your risk percentage. So that is what I'm going to teach you right away on the screens. So let's draw our little table as you can see on the screens. Now this R stands for risk, and P&L of course is profit and loss. Now it is a formula or method that you can follow in your risk management. And before I continue, I want to give you a disclaimer that it is not any sort of financial advice. It is something I have been following for the last couple of years, and this is something I want to share with you, the way I personally manage my risk and how I cope with my emotions and how I deal with my losses when I have a losing streak, and what percentage I use when I see those losses, and when I see a good winning streak. Everything I use, I'm going to share that with you. Now here, as you can see, R stand for risk and P&L stand for profit and loss. Now let's say we are going to take our trade. Now it's totally up to you what risk you are comfortable with, but I am personally comfortable with 2% of risk, and I tweak my risk in between 2% of the room. Now, let's say I'm going to take a trade. Now, I'm going to take you to a risk calculator. If you go on my website, you can scroll down. It's moneymarkets.uk. Just scroll down and you will see position size calculator. Come here, and now let's take our first trade. Now, let's assume your first trade is your winning trade. And in that scenario, we have an account balance, let's say £5,000. As I live in the UK, so we're going to use pounds. What I'm going to do, I'm going to take my first trade with 2% of risk. Let's say we are taking a Euro USD trade, and stop loss, let's do it 50 pips, and let's calculate how much money you could have made. Now, with with the 50 pips, you could have made $100 or £100. Now, it is our winning trade. So let's go back on the charts and let's add 2% and profit and loss, which is £100 for me. Now we have a first trade that is a winning trade. So that is good. Awesome. We made money here. That is our first trade. Now let's take another trade. Now, in this scenario, when I have a winning trade, I always go down 0.5%. And why is that? It is because when I have a winning trade, I don't know what's gonna happen next. In that scenario, the reason I go 0.5% down, because let's say if I have a losing trade, next one, in that case, I am not gonna lose everything which I've just made. And the benefit of that, if the next trade turns out to be a winning trade, that's awesome, I'm gonna make money. But if the next trade turns out to be a losing trade, then it will not mess up with my head, and I'm not going to go out to do revenge trading. And also, while my trades are running, most of you, when you place your trade, you keep on checking your phones. You keep on checking your trades. Oh, my trades are running in loss. Or what's going to happen if it hit my stop loss? It is because you are over your risk appetite. Now, if you are under your risk appetite, the first thing will come in your mind, I've just made $100 or £100. If I lose a trade, maximum it's going to be less than $100, and the benefit of that is you are not going to get panic. And in trading, psychology is 80%. If your psychology is strong, then you're going to see a losing streak. It's not going to hurt you, and I'm going to show you those examples how you can make money even though you have a losing streak. Now let's take another trade. Let's say we have a next trade after this. Now for my next trade, what I'm going to do, same pair, let's assume we are taking a trade on same pair. In my next trade, I'm going to use 1.5% of risk and calculate that. How much money we could have made or lose? It's going to be £75, right? So let's assume we have lost this trade right here. So with 1.5% of risk, we have lost £25, right? Sorry, we have lost £75, but we are left with £25 only. So you see how nice it is. If you make money in a first trade and next trade, you have a losing trade, and just going down by 0.5%, you still didn't lose anything, and the benefit is that you didn't get panic. Now, another benefit, you will be still motivated to look for a next trade because you have that confidence. You gain that confidence from your first trade, and with the second one you have managed your risk, and at this stage you would be like, yes, my first trade was a winner, my second trade I managed my risk, so well done. You are still up with £25. So let's take another trade, and this time what I'm gonna do, because I have a losing trade, I'm gonna stay with the same risk, which is 1.5%. Why is that? Because I'm still not comfortable taking 2% of risk, because if I go 1.5%, I'm still gonna lose 75 quids, not 100 quids. So let's have a leverage and margin of 25 and keeping the risk same, because we had a losing trade, keeping a risk to 1.5%. And let's take a trade, and now that is our winning trade, right? Now here you see the magic. We are back and we are up again on £100, and because the second trade was a losing trade, we were left with £25. The third trade was a winning trade, so we made £75 plus the money left from the last one, 25, and that turns to be £100. Now at this point we are back on stage one, and we are now increasing not decreasing because we followed the risk management. Now, at this point, when I'm going to take my fourth trade, that's going to be 2% risk again. That's going to be 2% risk again. And here we go. What do we have? We have a winning trade, right? Now, if you say, Omar, what if it's going to be losing trade? That is what I'm going to talk about in a very short moment. The trades we took, I'm going to show you that example. But this is just a generalization how you can make money and how you can manage your risk. But let's assume now we have a next trade as a winner. And now I took 2% of risk because I had a winning trade. Now I have a leverage of increasing my risk, which is 2% under my risk, 2% not increasing above 2%. So what balance have we got now after this winning trade? We have got 200 pounds balance, and you see how nicely we increased 50% of the equity just following some simple risk management method. So just 2% of risk, and that is the room, that is the only room we have. We can go 0.5%, we can go 1%, we can go 2%, not above that. But if you're someone who's comfortable with 5%, 3%, then you can follow the method accordingly. But here we made money. This is something I personally do. Now at this point, I have a leverage. Now I made money here. I have a strong mental confidence. Now my confidence is increased because here I said that, yes, Omar, you have started with 100 pounds. Then you have losing trade, but you didn't lose everything. And then you had another winning trade inside your risk room. And here we have a winning trade. And then third trade is also a winning trade. You have doubled your equity. So at this point, if I'm going to take my fifth trade, I'm going to use exact same risk, which is 2% risk. And if I'm going to take my 2% of risk, if I have a losing trade, I will lose 100 pounds. Not gonna lose everything. Remember, I'm still profitable. But if I'm gonna win the next one, then I'm gonna make 100 pounds more. Sorry for the drawings. And then I'm gonna have 300 pounds of my equity. And I'm gonna move my risk exactly something like this and keep myself under the risk where I can manage my trades, manage my risk, that if I have a losing trade, I'm not gonna blow up my account. Maximum, I'm gonna lose some money, but not everything. Now that is a method I personally use. If I have a losing trade, I reduce my risk. If I have a winning trade, I keep 2% of risk. If I have a losing streak, then in that case, what I do. Now let's go the spreadsheet of the trades so far we had this year. And by the way, we are up 75% here on our trades so far this year. Now I want to show you something here. That was a losing streak, right? But what do we have after that? Big winning streak, right? Only 2 trades. But the reason I'm going to show you this part, because that is where your mind gets messed up, and how I managed my risk and how I still made money here. So let's start with this one, a losing trade. So let's say we have a losing trade on Euro USD. Let's take it as a Euro USD, same method. And the first trade we had here with a 5,000 pounds balance, 2% of risk and 50 pips. And we have a losing trade of $100, right? So $100, we have a losing trade. We are minus in the equity. Now at this point, of course, you are scared and you don't want to lose a next trade. But if you are under your risk, you are not going to blow up your account. You still have $5,000, $4,900, and you can grow that again if you are under your risk. Now, here we have a losing trade. So exactly something that has happened in real markets with us. The next one, we have a losing trade. So now at this point, you are scared, you are fearful because you don't want to lose money. Now this is something that was in my beginning stages, and you might experience that as well. But at this stage, I don't even feel any losing streak because I know how to manage your risk. The example I've just shown you how I manage my risk percentage. So at this point, we have a losing trade right here. Now the next one, what I would have done in the next trade, I would have reduced my risk to less than 2%. So I'm going to go down to 1.5% in a hope that I'm going to have a winning trade, right? So 1.5%, let's hope we have a winning trade. And oh no, that is also a losing trade. But here didn't lose $100 or 100 pounds. We lost 75 pounds, at least less than what we lose in the last trade. So we are minus 75 pounds. So at this point, we are minus 175 pounds. That's a weird 5. And now at this point, the beginner's head. Oh my God, I've lost this in 2 trades. Now in my next trade, I'm gonna conquer the market, and instead of going 1.5% of risk, I'm gonna go 4% of risk. If you do that, then trust me, what's gonna happen? Let's assume next trade is your losing trade as well, and with a 4% of risk, what's gonna happen? You are losing $200 again. But imagine what's gonna happen with your head. You're going to increase your risk in a hope to recover this $200 and $175 which you have lost already. Now, this is the mistake we are not going to do. After 2 losing trade, the third one, we had a winning trade, right? After these 2 trades. Now, in the third one, what I would have done, I'm not going to take 1.5% of risk because I have 2 losing trade and I don't want to lose more money. The professional traders, they don't think how to make money. They think how in the next trade they can reduce a loss if there is no profit. So instead of going 1.5%, I would have gone 1%, and right here, yes, that's a winning trade, made $50, right? So now we are in a loss at this point of 125 pounds or 125 dollars. See, we have reduced the loss instead of increasing the loss. After the 2 losing trade, if you would have gone 4% and that was a losing trade, that would be more loss. But luckily, we had a winning trade. Now we have reduced the loss. Who knows what's come next? Who knows next one is going to be losing trade? Let's assume as a trader, next one is going to be a losing trade, because that is how mindset should be. We are not going to think the winners. We're going to think about the loser. What if the next one is a losing trade? I'm going to lose more money, which we don't want. I want to at least come back to break even and then start making money again, right? So the next one, we're going to keep the risk down. So let's go back on the charts. Right here, the next one we had USD CHF, right? That was a losing trade. And these are the trades exactly I've sent and exactly I've personally taken. Right here, which is our 4th trade, right? Here, I'm going to go down to, I'm going to keep my risk same. The last one we took 1%. So I'm going to keep my risk again to 1% until I'm back on break evens. Right here, again with a 1% of risk, what money I've made? $50, right? So plus $50, we are coming back up. And now we are in minus $75 or 75 pounds. See, we are coming back in the market. We are not doing revenge trading. Yes, if I would have taken 4% of risk and that was a winning trade, I would have made everything in a single trade. Trust me, that can happen once, that can happen randomly, and if you trade randomly, trust me, the results will be exactly random. So if you follow the rules, if you follow the risk management rules, then this is something you're gonna get in your trading in the long run, not randomly. We are now in loss of $75 only. So the next one, what do we have? Right here. Next one, we have winning trade, right? And this is our 5th trade. So let's go back on the calculator. And next one, as now we have 2 winning trades in a row, I would like to increase my risk a little bit up. I'm going to go down to 1.3% of risk. See, we are still within the 2% of limit, right? So with 1.3% of risk, I made $65. I increased up risk slightly up, not doubled it, slightly up, because I'm still in a loss. So we made $65. Now we made 65 here, and now we are only in a loss of 10 pounds or $10. That's a big mess. Let me remove that. So let's remember we are in a loss of $10 only. So left with only $10 loss, right? And next one, what do we have? Next one is also a winning trade. Right after this one, we had a winning trade. And for the next one, I'm going to go up a little bit up. And instead of going 2%, I want to keep it to 1.5%. And here we made $75, right? Now we are up how much? We are now up with $65, right? So we are back in the market. Whatever we lost, we made it again, and not in decades. Just within 2 weeks, we are back in the market, and who knows what's coming next. And right, as you can see, 3 losing trades right here. Now I'm not going to calculate every single trade, but let's assume we are now, after these 3 losing trades, we are now back in, let's say, minus $200 loss, right? And then we're going to repeat everything which we have just done after our losing trade. So back in 200 pounds or $200 loss. Now what do we have after that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 winning trades in a row. Who knows what's going to come next, right? 13 winning trades. That is happening in a real live market. And that is what I've sent to my members and personally took these trades. 13 trades after that. Now, just after few trades, we are back up with 65 pounds. Now, at this point, let's say after this loss, we are back in break even, right? Let's say we are back on 0 and we are right here. So from here, what I'm going to do, I'm going to go it very quickly. So starting with the winning trade with a 1.5% of risk, right? We made $75. Now winning streak has just started. Now in my next one, I'll be still taking 1.5% of risk because I still want to come back in profit. Now here we made $75. Now at the third one, as now we have 2 winning trades. Now for the third one, let's increase the risk a little bit slightly up, and here I made $185. Now at this point, we are gaining momentum. Now I'm coming back to my usual risk, which is 2%, right? 2% risk made $100. Good. Next one, I'm going to take 2% risk because we are now in a winning streak. Again, $100, right? Coming back here, right here, the next 13 trades are the winners. I'm going to take 2% risk again, right here. So altogether, all the way from here, when we got break even, we have made dollars, and after that we have a losing trade. At this point, I go down to 1.5%, then back to 1.5%, 2%, 2%, 2%, 2%, and then that is how you can never blow up your account if you trade exactly with this method. Because every time you take a trade, you are always below your risk, and you will never blow up your $5,000 account, which is just an example we are using here for the sake of this video. And that is how we came back in the market, right? And every time you increase your risk, you are compounding your money. Your money is increasing, and see, so far, even after this losing streak, we are still up with $3,000 just with 2% of risk. And if you are someone with $10,000 balance, right, that would be $7,000. If you're someone with $20,000 balance, you are up with $13,000 just in less than 6 months. And if you're someone comfortable with 3% of risk, you are up with $23,000 balance. If you're someone have just $5,000 balance with 3% of risk, you are up more than 100%, 118% of gains. So that is how you can manage your risk according to your own risk appetite. Now, at this point, I want to give you a strategy that I want you guys to follow, that exactly something like this. Follow the exact rules of risk management, the one I'm showing you. Losing trade, reduce your risk. Winning trade, go back up slightly. Losing trade, reduce your risk. 2 losing trade, reduce more risk. Winning trade, if you have 3 winning trades in a row, then keep your risk steady, right? Use that, but always stay under your risk. So let's go on the screens and let's learn how we can take our trades in a trending market and when the price hit the counter trading zones. Now, I'm going to give you one very simple way of drawing your zones, trend continuation zones and a counter trading zones, and the way you can take your trades from these zones in an accurate manner. So the market goes in 3 ways. It's a nice trend, higher highs, higher lows, higher highs and higher lows, right? Or counter trend when the price reaches a certain area from where sellers has previously pushed the price lower in the history, and history repeats itself, and we're going to look at these areas of significance from where the sellers have pushed the market lower, and it is a likely chance that price will push down again. Now the third way is just a consolidation where we don't like to trade and we are just waiting for the breakout. So let's do trend continuation first. Now when the price is making higher highs, something like this, higher low, higher high, higher low and higher high. So the goal is to take our trades at a pullback. So this is just a pullback after the price making higher highs to the higher low, and at this pullback we want to enter our trades. Now we are not going to enter our trades blindly, but we are going to look at this area and we're going to look back to see if the price has previously retested this level, something like this, something like this. So if we have a zone like this looking back and that turns out to be a good level of support and resistance, only then we're going to use this zone as our trend continuation zone. Now that is our trend continuation when the price making higher highs. Use the previous zone at the pullback, and then we're going to enter our trade with the conditions. Don't get confused. I'm going to show you the example in the real market in a very short while. Now this is what we call a trend continuation. But if the price hit a certain level, which is our counter trading zone, in that place we're going to look at a level from where the price has previously fallen down. Now when the price is pushing up, we're going to go back and see if we have a zone that turns to be a level of significance in the past. In that case, we are going to look for our counter trade. So that's what we need to identify, and I'm going to give you a very simple rules for that. Now a good example of a trending market of higher highs and higher lows. Now just remove the EMAs as pure price action, and as you can see the price is just pushing up, made a new high and higher low and higher highs. So at this point what are we looking at? We are looking at the pullback, right, and then look back and see if this is the level of significance or not. So just go back in the replay mode so that makes more sense to you. Now after the price made a higher high and higher low, at this point what we're going to do, we're going to mark a zone at a recent high that has been broken, which is right here, right? This is a recent high that price has broken. So it is a zone we're going to use to mark our trend continuation area. So for that, right at this zone, right here, we're going to mark a little zone, something like this. Now we're going to look back to see if we have some more levels that is aligning with this area, and we're going to adjust our zones accordingly. And we're going to look back and see something like this. Now as you can see, yes, it is a possible zone that now if the price comes down to and forms a condition and forms a pullback, we're gonna go for our long trades. So you see how simple is it? Just with the price action, price is making high highs, and just at the recent low we're gonna mark our trend continuation zone, and from the recent zone we need to just capture few levels like here. As you can see, that level has acted as a level of support, right? Support, resistance, and recently a resistance. So a good level, as you can see, the price has reacted out of. Now all we are looking at the entries, and what are the entries? Now after this higher high, we want to see an higher low and a pullback, and at this pullback we want to see some sort of bullish condition, pin bars, engulfers, some sort of bullish pressure for our entries. And if you play the market, and as you can see, what do we have? Exactly at our trend continuation zone bullish, we had a price that has formed a bullish engulfing pattern, and that is where we enter our trade, something like this, using the ATR. And let's keep the ATR just below the wick somewhere 25A, and just below that is 50 pips, something like this. And then you can go 1.4 to 1 risk to reward ratio, a better risk to reward ratio, and then you play the market. And as you can see how nicely the price pushed up and made another high. Now that is what we call a trend continuation trade. So what do we have? Price hit our take profit, and it's gonna keep on doing that, making high highs. And what will be our next trend continuation zone bullish, which is a pullback, and price made another high, which is something like this, right? Now at this point, if there is no entries, we are not going to look our trade. Now if you remember, we mark our zone at the recent break, and in this case we look here if we have a zone that turns out to be a good level, and right here we had a price acted as a level of resistance and a support, and if you look back, this level turns out to be level of resistance and a support in the past. So if the price give me a reason to enter within this zone, something like this, I'm going to take my trade. But I want to see a bullish condition in that scenario. So let's see. Right, so price did not make it to my level. So that is what we call patience, and we're going to move ahead to look for a next trade. Now, as a price keep on pushing up in a continuation, what do we want to do? We want to look at a next level, a possible counter trade, because price is making higher highs, and at this point I want to see a point of reversal, and what that could be. We want to see from where the price has pushed lower in the past. Now if you say we can just mark a zone something like this, no, we are not going to do that, because price is still pushing up, and at the current price we are in a strong bullish momentum, so we don't want to fight with the trend. We want to see from where the price has fallen down previously. If you look left above these highs, so if you look above left and see if any level turns out to be a good level to you from where the price has fallen down. Yes, if you look here, that level looks to me a good level from where the price has fallen down. So I'm going to mark my zone something like this, and make a little level something like this, and we need to make sure that that level has acted as a good level of resistance and a support in a past. So we had made our level, we are now prepared. If the price pushes up to this level above, only then we're going to look for our bearish trades, and let's see if the price pushes up. We are now in this level, right? We are now starting to see a reaction, but we're not going to enter our trade unless we see a bearish signal like bearish engulfer or double top entry pattern. So let's see if the price gave us some sort of reason in this zone, and what do we have? We had a nice bearish engulfing pattern. Now if we go back on 1 hour time frame, that is also a double top pattern. So you see, if you go down one time frame below, that is also double top. 4 hour time frame, aggressive entry. Now if you're marking your zones on 4 hour time frame, you can take your entries on 1 hour time frame, and going back on 1 hour time frame, we're going to use this as our double top pattern and place our position tool something like this, and keep our stop loss 180R, let's say, from the zone of the double top pattern, which is something like this. And I want to keep my stop loss a little bit above the zone, and take profit. Let's do 1 to 1 initially, and then we can manage till 1.4 to 1. So that is our entry triggered, and as you can see, we did not right away mark our zones at the current price, but we look at the area from where the price has previously fallen down and nicely reacted as a support and resistance both. So we are good to go now, and we have set our stops and target, and let's see how the price reacts from here. And after lots of patience, price did push down, and if you look here, 1.4 to 1 target has been hit easily, and that is how we enter our trend continuation trades in an uptrend. And when the price is pushing up, we look up the next level from where the price has previously fallen down, and that looks good to us, and we entered and we set our targets following all the rules. Now in trading, always remember, first we observe the market, then we look for the conditions, then we look for the targets, and then we take our entries. Observation was, yes, if the price is going to push up and hit this level, then we're going to start to look for the condition. What are the condition? Double top is our conditions. Yes, we are ready to set our targets. Set our targets, stop loss above, take profit 1.4 to 1, and we take our entry. So that is how we take our trades. And this is a challenge I want to give you. Follow the exact same rules and use risk management in an appropriate manner. Don't increase your risk, stay under your risk, and when you have losing trade, don't increase your risk. Instead, decrease your risk, and you will see the magic, and in a time you will start seeing the results. And this is a 2 months challenge to you. Follow that strategy for next 2 months. Come back to me and tell me if you have seen the improvements. Using the simple risk management method, just staying under your risk can make you insane amount of money. I've shown you the live examples, the trade which we recently took in the live market. We were in a loss, in a losing streak, and how we managed to come out as a profitable trader. I've shown you the potential of the profits if you follow exact risk management rules. Now, why most of the traders lose money? Because they don't follow this method. When they see a losing streak, they keep on increasing the risk, eventually blowing up their account and eventually leave trading as well. why the professional traders sustain in the market, why they are the ones making money. Because they have a set in stone rules. They don't change that. They never change the strategies. They never change the rules. They stick with the plan. They stick with the risk management, and they know when to reduce the risk and when to increase the risk. And if you follow that as well, then there is no way that can stop you to become profitable. You have seen the potential. If you are under your risk, there is no way on the earth you can blow up your account, because you are in the limit of risk. If your stop loss is hitting, then you still have a next opportunity to trade. And very important, you must have a tested strategy. Because I personally have my own strategy which I personally use that has been profitable from last couple of years, and because of that I can able to make money using the exact same rules of risk management, and with that strategy, not changing that. Even though I have a losing streak, I use the same strategy, and in the end you have seen the results. And that is just one in few strategies I personally trade. If you are interested to learn full system, learn all the other strategies which I personally use for my trading, then consider checking moneymarkers.uk premium plan. That is a full trading course. If you want to check that out, if you want to learn full trading system with the organized lessons, with the organized ways of taking one step after another, not just juggling around on YouTube looking for different strategies and try to use every single strategies and then you eventually give up. So if you are looking for the organized way of learning, where you will learn from the basics to the advanced risk management, trading psychology, then this is something you need to check, and that is not something very expensive. I've seen traders losing thousands of pounds or dollars, but they're not ready to invest little money on their own self so that they can grow that money. And trust me, after learning that, this is nothing you will spend on your own self. So I'm going to give you a challenge. Next 60 days, follow your risk management, stay under your risk, whatever percentage you are using, and follow the support and resistance method I've just shown you. Use that. Only enter your trades with conditions, which is your double tops, which is your engulfers, bearish conditions, from the counter trading zones and from trend continuation zones. Do that on a demo account for next 60 days and use the risk management. Come back to me on this video and tell me how was the results if you follow all your rules. I wish you all the best. I hope you got a value. If yes, give a thumbs up to this video. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green. Have an awesome weekend. See you guys in the next one. Take care.